Hello and welcome to the Investor Master Series. My name is James Boyd. We welcome all of you on this Tuesday morning. And we got Rick with us, Joe with us, Silas, Dom, John, AP514, Bill Rogers, Eva, and many others. Good morning and welcome to all. Now remember, this Investor Master Series, think of this as a class that's maybe more intermediate to advanced. If I say advanced, it doesn't mean you can't learn it. We want to have a class where if you have investing experience, that you could actually have a class at your level. Now, if it was me, I like to take all the advanced classes because kind of like how do you learn how to swim? In the deep end of the swimming pool. Now, this class discusses stocks, fundamental analysis, technical analysis, and option strategies. We will leave out futures and Forex. So we'll just be talking about stocks and options, technicals, and fundamentals. Now, just real quick as we get started here, got some questions that have built up, so I want to get to those as soon as possible. And also remember that the options, when we talk about stocks and when we do bring up options, remember that options carry a high level of risk and are not suitable for all investors. So also remember the information here is provided for general informational purposes only. This webcast discusses technical analysis. We do discuss fundamental analysis Wednesday at 4. We invite you to join us. And fundamentals and technicals may assert some different views. As you progress in your learning, get used to looking at macro analysis like economic data. Get used to looking at intermarket analysis, correlation of asset classes. It's fascinating, okay? It really is. And Schwab does not recommend the use of technical analysis as a sole means of research. Investing involves risk. And also remember that when we talk about short options, those can be assigned at any time up to expiration, regardless of the in-the-money amount. We're talking about American-style options, not European, which could only be on expiration, okay? So our examples are American-style options where that could or can happen. And also remember that position sizing is very important and understanding what your obligation is. Now, today, what I want to talk about just briefly is I first want to take a look at our current positions. So if you said, geez, I would like to learn, I invite you to learn from our two paper money accounts. They are paper trades in a paper money account, but they provide great learning. We'll look at the margin account first, and then we're going to look at the IRA. From there, we talk about stocks, we talk about options, and so we'll look at both of those type of strategies. And we'll talk about also current market conditions, what we see, and then what we're also going to talk about is new examples as well. Want to give just a quick reminder. Many of you know that, first off, if you go to just pull up youtube.com, and you type in Trader Talks, Schwab Coaching Webcast, right in your search bar. Now, you probably don't have to type the whole thing in because it will give you kind of a pop down and it will show you that. So you could actually see this on your computer. These are our live classes and recorded classes here as well. Make sure you get used to the home button, videos, live, what's live right now, playlist, and so on. Want to give you a quick reminder, it doesn't matter if you're traveling, if you don't have your computer with you, if you're in Tokyo, if you're in Berlin, or you're in Prague. It doesn't matter. Wherever you go, we're right there as well. Now, by the way, it could be on a phone or it could be on an iPad device. So make sure you actually tune in. Now, just real quick as we get going here, I want to pull up that paper money account. Now, first, we're going to talk about our current positions, okay? I'm not leaving out current market conditions and new examples. We will, but I think we need to address some things, maybe, and be some good learning for us. So first off, we are in the margin account, okay? And what I want us to do is I want to kind of take a look at a couple of positions, and I've opened them up. That way we can kind of see what's going on, what type of strategies they are. Now, about 2-3 weeks ago, we did a position on Nucor, right? And we talked about, for example, doing a short put vertical on this. Now, this is really labeled as short puts, cash secured puts, in other words. But I think we could really just push this down to even do a vertical, and I'll do that. Let me push that down so that would make more sense. So I'm going to put that in the vertical pile. Now, if I look at the NUE, the reason why I bring this up is because we sold the 120 and we bought the 115. It is now sitting here at 73% of the maximum gain. Now, we're going to talk about some good ones and bad ones, okay? Now, if you look at this, the stock is down $1.83 here today, but we still have 73%. This is the one yesterday that I from what I can remember, did go over 80%. And what I'm going to do is I'm going to show you where this was entered 3 weeks ago, January 13th. Let's go back to that chart so you can see exactly where that was. And it's important for me to have you see where the entries were, okay? That way we can see the consistency. So on the 13th, it was right there, okay? Now, number one, we always talk about the foundation of our demonstrations or examples is that the price is above the shorter term moving average. It was. If we look at that day, it was also a close above the high of the low day. That's consistent with what we talk about. It ran up, it went through the earnings, and then here. Now, the reason I'm going to kind of put a little white dot there, that's going to be the exit here. Now, let me ask you a quick question. Would you roll the position? If you roll the position, you exit what you're in now, and you enter a new position. If you think there's more potential upside, and we're going to do this quickly, let's say the investor says, James, I think it could revert back maybe to a high 130. I'm going to exit what we have now. I'm going to enter a new position. If we said language such as we want a higher potential profitability, we might change this from a short put vertical to a long call vertical. We did the opposite yesterday. So let's kind of show this example. So trade number one is we're going to exit the NUE. We're going to create a closing order and we're just going to exit. Now notice I'm just getting out of what we have. Now it's up to you how you like to exit, okay? I like to exit where I can see exactly what this fill is going to be for this type of position. Now when I bring it up, you're now going to see that we have the mid price, 48 cents, confirm and send. Now if I go to confirm and send, I'm just saying, look, we got in for a credit, okay? We're going to give some of the credit back. Why? Well, because it's not all the way to the expiration, okay? So there's some of that credit still there. We're going to buy it back, and we're going to buy it back for 48 cents or less. There's the commission. Now, if we're going to do this, what I'm going to do is I'm not going to go to the 21 February. Don't have a whole lot of time there. We're now going to go to the 21 March, okay? Now, if you look at the 21 March, are they liquid options? AP 514, are they liquid options? Bill, are those liquid options for you? Gary, are those liquid options for you? Now, I'm telling you, if I had $1 for every time someone said, I'd like to learn about investing and I just don't know how, well, buckle down, okay? So let's learn. So if we take a look at the position, some of you should have said, well, James, we're on Amazon. That's true. Let's go to NUE. And even if I actually pull up the NUE, you're going to notice that even if I look at the 21 March options, there's still a couple hundred contracts, over 1,000. There's 5,300 contracts. So trade number one, NUE does fill. Okay, done. Took that and actually grabbed that. Now, let's speed this up. What we're going to do in this case is we're going to buy the 125, the in the money call. Then, number two, we're going to sell the out of the money call. And we're going to create a long call vertical spread. I'm telling you, as Barb is with us, and I teach this as well, get used to vertical spreads. Okay, it's a great way to really learn how to trade some higher price dollar stocks, or if you just want to not tie up as much capital. Now, if we did the 125, 130, the debit there is 275. $5 wide spread. $5 less 275, maximum gain 225. Confirm send. Now what we're going to see on this, there's the numbers on the trade. Why is it not more one-to-one? Like $250 potential gain, profit, $250 max loss? It's because we're really closer to the 130 call, and that 125 is deeper in the money. Noted. Note the commission there, and what we're going to do this in both accounts. Now, number one is we're going to go single account. We're going to go to multiple accounts. Now, do you know any investors that say, geez, I have multiple accounts? How do I actually kind of get them moving in my favor? How do I get those assets to stop sitting on the couch, so to say, and make a return for that investor? Well, let's do that. Let's take multiple accounts, and what we're going to do is say, okay, how many contracts could we do in the margin? Let's say we could do one in the margin, but we could do at least 3 in the IRA, at least. Now, the buying power effect is really what the max loss is given the vertical for one contract. That's 825. That's for 3 contracts. So that's not that bad. Okay. Now we're going to go ahead and send that order. And there it is. So the first trade we actually did is we closed out the NUE position. Then we actually said, look, we think there could be more potential upside. It's still above the 10-period moving average. Okay. Or actually, I should say the 20. And it's still kind of in that green color there. Okay. So we got that right there. Now, what I want to do is I want to go back to something just real quick. One example I want to bring up just real quick is Dash. Now, if I go back to Dash, now notice also at the very top, when you do an order that's for both accounts, it's going to take you at the very top. It'll say total all accounts. We're going to go right back to that margin. Now, when I go right back to that margin, I'm going to pull up these trades. These have 17 days to expiration. That does not mean that they might not have a high percent of the maximum gain. I need some help here, okay? Now, if I take a look at this, we got a call, okay, which we bought, and we have a call that we sold. Now, that right there, that is your long call vertical. Now, here's your pop quiz. What was the debit? Okay, what was the debit on that previous long call vertical? I'm going to pull it up myself. Well, what was the debit here? Well, you paid $11.25, okay? And then number 2 is you collected $5.90, okay? Now, the answer to that is the debit there was $5.35. What is the spread? Now, this is a little different than what we normally do, but what you're going to see is the spread is from really 180 to 192.5. So it's $12.50. So the maximum gain we can make on Dash is really $715. We have, if you look at the gain and the loss, we have about 200-ish or so dollars. We don't have enough there, not yet. So we have 200 of the 715. We're going to close the oven and let those chocolate chip cookies still bake. So that one's, we don't need to touch that. This one right here, the put spread. We did this at the exact same time. What was the credit there? Well, you got $8.85. I'm pointing to it. And then you paid $5.80. And if we look at that, we would actually say that that credit there is what? $3.05? Is that right? $3.05? So if we look at this position, say, do we need to do anything? If you got $3.05 and we have about $115, that's about 30% or so of the maximum gain. Don't need to do anything with Dash. So I'm going to close that up. But I was just kind of making sure you could run the numbers. Okay? Now, if I go to, let's say, IBM, do we need to do anything? Now, by the way, here's the thing. It's one thing to know the strategy, like kind of structurally, but can you look at these positions on a day-over-day basis and then kind of see what you need to do? Is there an opportunity? Now, if I look at this, same thing. I'm going to go back and say, well, how much was the call purchased for? And then what was the call sold for? A long call vertical. What was the debit there? Debit was $2.30. What was the spread? $5. What's the maximum gain? $5 less $2.30. It would be $270 would be the maximum gain. Is there any opportunity here? Well, we're sitting on, literally sitting right on 260 of the $270. The investor might say, you know what? I'm going to right click on that and I'm going to grab that, okay? Create closing order, sell. Now here's the thing. This is not buy and hold. This is not like buy something, put it in the garage 20 years later. You got to understand these have expirations to them. Okay? We're going to create closing order. We're going to sell. Now, does that mean that we're not going to, for example, enter again? Stay tuned. Now, I'm going to go to confirm and send. It's already at the mid price. There's the commission. Trade number 2. Okay, IBM. Going to profit take there. When was that trade placed? It was on the 7th. Let's go back to the chart together and see. Okay, like that. If we go back to the 7th, where was this? And I think we pointed this out before. We got in right there. And the next 4 days, we actually made a low 4 days later, okay? Now, the one thing you got to remember about a spread is when it goes down, let's say $8 or so, it's not really going to probably do a whole lot of damage because your delta is only about 10 per contract. So if someone says, hey, if I had a delta of 10, okay, and we went down, let's say $8, this drop would have been about $80 on the contract. Now, for a stock investor, if they had 100 shares of stock, that would have felt more material. If the max loss would have been $250, they were only at 30% of the max loss. And then from there, it just kind of took off from there. Now, I got to ask you a question, okay? Siri, okay, AP514. Would you say that this is like at the top and it can't go any higher, or would you actually say that this might even go higher than where it is now? Now, here's what happens a lot of times is when people profit take, a lot of times they'll like just go to a different stock. But the biggest actually thing is you got to be thinking about is, wait, why are we leaving? Is the trend over? I mean, is it? Who said we had to leave? Well, let me kind of pull this back for just a sec, and let me go to a 3-year weekly chart. That's the 3-year weekly chart. If I go back even farther than that and say, what do we got here on the 10-year chart? That's what we have on the 10-year chart. Like we said before, this is not your daddy's or your mama's IBM anymore. IBM entered a new push in the middle of 24 when it rocket shipped up through the 160 area. So what we're going to do is we're going to go back to the 1-year daily chart, and we're going to do kind of more of a strategy where can it stay up above a certain price level? Well, if we took a look at this, we got, let's say, the stock yesterday. What type of candle was that yesterday? What type of candle? Well, that candle yesterday was pretty clear as a bullish engulfing candle. Why would you make a bullish engulfing candle unless you didn't think you could go higher, right? And remember, when we gapped down yesterday on IBM, someone bought that. Now, what you're going to now notice is we're going to say, look, could IBM stay up above a certain level? The investor says, James, I'm going to use yesterday's open as a little plateau of support. And I'm going to try to sell, the investor says, a strike below that level of support. Now, we're going to go to the 21 March. Now, notice that the Februarys are starting to come off now, okay? And what we're going to do is going to go to the March. We're going to go to the put side. We're going to right-click on the bid for the 250. Now, if we look at the 250, we got a 250 strike, bid-ask spread about 15 cents, open interest 953, delta 29. Now remember, delta is saying the change in the option price over the change of the stock price, okay? It's also stating approximately what's the probability of the stock being 1 penny below the strike price, okay? Dual meaning there. Now, if you take a look at this, that's a 29% chance as of right now that it could be 1 penny below the strike price. Now, could someone go a little bit more higher in terms of the strike prices and sell something and get a bigger? Yeah, they could. But we're just trying to kind of do something based on a higher probability of being right. How many of you like being right? Okay, I just want to see if you're listening. If you don't respond, I'll know that you're a recovering person who tries to be right all the time. Now, we're going to sell the 250, buy the 245. Trade number 3. On IBM, we're going to sell this $1.40 credit. Now, this might just blow some people's minds. They're like, why would you do a trade where the maximum gain is smaller than the maximum loss? Probability, okay? That doesn't mean that this can't win. But what we're going to do in this case is, in the margin account, 1 contract. In the IRA, we're going to do minimum 2 contracts. Let's go back to single account, go back to multiple accounts. We're going to go change it to 1 contract, push the IRA, go to, let's say we push it to 3 contracts, okay? Now, if we go to 3 contracts, IRA 2. Now, I want to kind of tell you something, okay? This might really surprise you, okay? Historically, I used to kind of have in my mind, how many positions would I like to have? Things like that. And it's a good question. It's not that it's bad. But the thing is, what you're going to notice is if we were to look in this paper money margin account and say, how many positions do we have out of a $30,000 portfolio? 3, 4, 5, 6, 7, 8, 9, 10. We have 10 positions in that portfolio, but we've only gone through about a third of the cash. So in some people's minds, they don't really kind of say, I would like to have 10, 12 positions. They're really just kind of saying, do I have any cash left? And they're trying to play the current trends in the marketplace. That's what they're trying to do. And the same thing goes back to, let's say, the IRA, whether they have 10 trades or 12 trades, whatever. They're also just saying, do I have any money left to trade? Okay. Now, with this, I think kind of more important is it's not how many positions, it's are you in the areas of the relative strength? In other words, if you looked at both portfolios, are you considering maybe the 3 to 5 sectors that have been stronger? I think that's more important than how many positions someone has, because you could have a lot more positions and be in the wrong areas. Is that sinking in now? So I mean, you could think about, I'm going to try to have so many positions. Maybe change the question. Are you in the right areas that have shown relative strength? We'll come to that in just a moment. Now, I want to do this last example for just a second. Now, I am not allowed to have my calculator. Okay, I had like a little, we had a little fun sheet, and it wasn't much of a calculator. So I have to start fresh. Don't worry, we'll make it fast. So yesterday we did an example on Amazon, and we talked about doing a caller. And that caller is just simply buying the shares, selling the call, which is a cover call, and then for downside protection, buying the put. Now, I sure hope that you are getting more and more comfortable with a caller strategy, because the foundation of it is a stock position. Now, the entry, okay, of the stock position, we can look up and see what it is right there, 237.89. Now, this position was put on yesterday. The short call, as you can see there, the short call, we can do it fast, 250. What was that? It was 495. Okay? Now, was there a credit or a debit? Well, you paid $495 for the put, and you collected $495 for the call. Okay, so that credit there, if we look at that and say it was what we call a zero cost collar, this creates what we call a max gain. Now, the max, if we talk about, let's say, the downside, the long put, well, the long put's at 225, 227.5. And if we look at, is it a credit or debit? Well, we got a credit there. We already know that's zero. We can just bring that down from up top. And instead of a maximum gain, we're just going to say max loss. Well, if you take a look at this, from 237.89 down to 227.50, that max loss is just the differences there. It's just basic math. Okay, sorry. I know you maybe thought it was going to be harder, but it's not. If we bought the stock there and we have the max upside at 250, again, basic math, 250 less 237.89, there's your maximum gain, there's your maximum loss. Now, remember we said this max gain, max loss is very representative of doing a long call spread. Long call spread does not have shares. Caller does, though. Okay? Now, when we take a look at the position, this is up $155 in about 1 day. So if I said, hey, this is the current P&L, okay, it's not realized. We're sitting here at about $155. When we look at percent in that dollar, if we look at that and kind of say, how much do we got? Well, we literally have about 13% of the maximum gain. The answer is so far. What I want you to get used to is kind of looking at the percentage movement, okay? So this stock actually goes up 435. It's making the whole entire position up 154 or 155, and that 155, $1.55, is really a fraction of the maximum gain. So right now we're sitting on a position where we're about 12% to the good on the maximum gain. Okay. Now, the reason why I want to do this is I need you to kind of understand that these verticals, they could go up $4, $5, $10. If this had a profit loss of, let's say, $400, well, what you're going to notice is it would only be at 33%. Okay, so that's the thing that's interesting thing about verticals is you can have pretty big moves in the stock, but when you really look at the percentage gain or loss on the maximum gain or loss, you're going to need a big move. Okay, that's why people do verticals or collars. They're trying to have, when there's pockets of volatility in the marketplace, they want to have strategies that are more forgiving and not so sensitive to price movement. That's a big deal. So that's going to be something I absolutely jackhammer over this week, getting people to really understand price movement on verticals. Okay? Now, let's kind of talk about current markets here real quick. So when we actually look at the margin account, I don't know, we have 10 or 11 positions. If you look at the ones we just did, we would probably have 12. Okay? If we look at the IRA account, I don't even know. Frankly, don't even care. Okay? I'm looking at the cash and how much we have available. We still have about 50% of the cash. So we have 12 positions or 22 positions. I don't really know if it matters. The only time it really would matter is if the investor is monitoring what the maximum drawdown could be, assuming all those drawdowns were hit. I should say all the maximum losses were hit. And if they're trying to monitor the risk that they're taking, that's when it would make more sense. We don't do that, okay? Because a lot of our strategies aren't necessarily the same, okay? But if the investor was trying to do that, that's when they would probably monitor that. Now, let's go to just real quick, the market real quick and talk about kind of where we are. So first off, gold overnight or this morning hit a brand new high, okay? Now, not a surprise, we also saw silver also trying to get a little reversal itself. When we look at the indexes, you're going to see Dow is literally sitting here about plus 92 or so. We said this on Friday, that it would not be unusual to get a little cup and handle pattern. I even posted on Twitter yesterday a picture of a coffee mug. And so far, we're kind of forming maybe the right-hand side of that handle, okay? Now, if you look at this and say, well, yeah, we dropped down yesterday, that's bearish, okay? Well, you know, we got hit by news, but nevertheless, it really wasn't down that much from day to day. From Friday to Monday's close, wasn't much of a drop, okay? I mean, if that's the best shot the bears could hit us with, some bullish investors would say hit us again, okay? If you look at the S&P 500 and say, did it really collapse? No, closed above that 59.80 level that we've been watching, and now we're trying to poke right back above. If we went from Friday to today, we're barely down. So if this is the bad news, it didn't take very long for the market to resiliently go right back to the upside. And when you look at the NASDAQ itself that was maybe hit the hardest, the NASDAQ is above the Friday close, the NASDAQ. Now, when we pull up the sectors, 2 weeks ago, we talked about this group that we've never talked about before, jokingly, is called communications. Communications on a week basis, on a month basis, has been quite solid. Now, when you look at the dollar sign IXC, you're going to see that on a day basis, it's up 0.86. Now, remember, name the stocks that are in that group. Name it. Now, if you can't answer this, the last 2 weeks you haven't enjoyed it as much, okay? But if you look at, let's say, what are some of the stocks that are in the area? Now, by the way, I want to say something, and don't take this mean, okay? Sometimes you have to hold the line, okay? If you look at, let's say, the week percent, if you look at the month, and if you look at the RS5, this is really going to give us a sense of where the momentum is, where the trends are, and where the relative strength is. Okay? So, if we look at the week percent, is there any other sector that's been stronger than communications? No. Next. Has there been any other sector that's been as strong as communications? Denied. No. Now, if we said, is there any other sector that's really had multiple time periods of green, 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 green on the relative strength? Answer, no, not a single time. So and by the way, if someone said, hey, I haven't been watching communication sector at all, I kindly say you haven't been watching relative strength. What is your favorite sector? The one that's going up, okay? So be careful about getting locked into, I like these sectors, I like these sectors. The best technicians you'll find, they'll say to you a comment like, the best sector I have, the ones that are going up. They're like a chameleon. They're always kind of monitoring which ones are going up, and they're aligning that portfolio to those areas. Now, what stocks are in those areas? Well, speaking of that, well, we know Meta's in there, okay, which we've talked about quite a bit. Now, by the way, when you look at IXC, we do see a little call hold, close above the high of the low day, or tall hold. Tall hold is trading above the high of the low day. You're going to also see that we're flirting, okay, with hitting a brand new high on the 20 and 55-day high. And when we go to that $ IXC, and we'll come to Netiflix in just a second. So what you're going to notice is this was the 20-day high just 2 days ago and the 55-day high. So when we were just looking at it earlier, it was showing a 20-day high and a 55-day high. Now, if someone said, James, I want to try to make investing as simple as possible. I'm trying to get in where we start a green shading on that moving average, and I'm trying to, for example, get out when we start to see a red shading. And here's the thing, you can make investing as simple or complicated as you want. We're trying to make it simple, okay? Now, we're not buying the sector. We're going to buy one of the stocks in the basket of the communication sector. Now, that stock that we're going to actually hit here in this example is we're going to go to Netflix. Now, if you look at Netflix, what you're going to notice is, tell me where you see support. Where do you see support? Now, we saw the stock gap to the upside, and I'm just going to start drawing some lines, okay? The stock gapped up, and you're going to kind of see it's right there. Over about the last couple times, we've been seeing it like what? 1 touch, 2 touch, 3, 4, not quite. Maybe some recent levels about right there. So if we kind of said, where do we see that support? It's probably right in that area of 956, 972. Now, them brothers Goofy says, I do not see the sector on my list. You need to put communications on your list, okay? That would be helpful. Now, also, if that tells me you're not coming to our ETF class on Friday, and it hurts my feelings, okay? So come on Friday, 9:30. You know, we talk about those sectors, and then we share those lists visually so you can see what lists we're actually looking at. It's a good way to kind of compare. Are you kind of looking at some of those commonly viewed groups? Now, what I'm going to do is I'm going to go to the trade tab. And what we're going to do on this is we're going to go to Netflix. And again, we want to ask ourselves the question, is it liquid? And if we go back to, let's say, Netflix, we've traded almost 3 million shares of stock in the first 2 hours of trading. So if the stock is probably pretty liquid, the options are probably maybe pretty liquid. Let's go check. Now, if we said, well, James, I want to do something probability-based. I want to do something with the idea that, now, by the way, I want to kind of go back to something fundamentally here, okay? How many of you remember when Netflix was $7.99, $6.99 a month? Do you guys remember that? Now, the other day we were having family movie night. My kid said, Dad, pull up your Netflix. I don't have Netflix, okay? So I went and looked at Netflix and about choked when I actually saw that it was like $22.99, okay? So now what you're going to notice is, and of course, what did I have to do? I had to pull up the fundamentals right during movie night. And I was thinking to myself, gosh, dadgummit, what's the earnings per share on this thing? Well, a 5-year trend going up. You raise the prices, what a shocker. Now, 608, 1124, 995, 1203, bang, 1983. So what we know is when people say, I am so busy watching TV, because somebody's pushing this up. Now, if we also take a look at this, the free cash flow, which is that free cash flow could reinvest back in their own business, but it could also be something where they maybe go out and try to buy technology or buy another firm to maybe increase what they do themselves or add on to a type of a business that they might be looking to get into. And by the way, their ROE, net income over equity, is only at 38. Oh, okay. So don't think that this is all about technicals. And I want to kind of say something right here, okay? If you looked at some of these large investment firms, if you could find me any of those reports that they come out with and said the main reason why we're buying the stock is because there's a bull flag, I would give you a monopoly dollar bill, okay? There has to be more due diligence than just the price pattern. Let's be honest here, okay? Is there an engine underneath the hood that, so to say, a real business that could drive the price action? Now, what we're going to do is we're going to play something that's more probability based. We're going to go down to about that low mid 30, 35. Now, I'm going to tell you, everyone here is saying, geez, I need to make my investing accounts grow. Everyone says that, including myself. The question you got to ask yourself is, what businesses are you really buying stocks on? Okay. Which companies do you have that are the leaders in their space? You got to open up the hood. Okay. Now, you could kind of say this is kind of like getting married in some respect, that you want to meet the family. You want to have a relationship with him or her for a couple months, years, and so on, and see some behavior, some trends that, in other words, if you commit that, for example, that there could be a long-term relationship of sheer joy. Yeah. The reason why I say that is a lot of times people think about stocks and you're going to get in and out. That's not necessarily what the goal is. Trying to actually get in some of these stocks and seeing if they can't trend. Okay. Now, the one thing I want to also go back to is we're going to sell the 965s. That has a lower delta, slightly lower than the mid, about 33. And if we did, in this case, a $10 wide strike, okay, if I open that up, there we go. Sold the 965, bought the 955. And what I'm going to do there is I'm going to kind of just, now, by the way, when I did that, you're going to see that that one right there has an open interest of 76. Ooh, yuck. Now, this one right here, that one, now remember, it's a higher price dollar stock, so we know the bid-ask spread is going to be a little wider. If we look at that right there, it's about 85 cents. So we want to try to make sure that we're kind of getting in the middle, which is about 40 cents. I'm going to adjust the strike back up to the 970, because if I did a $10 wide strike, I'm going to pick the 960. That's 500 contracts, not 76 contracts. Okay. We didn't know that until I opened up the table. We're going to right-click on that. We're going to sell. We're going to go to vertical. Now, we've got to ask ourselves the question, do we have still any meta position? Do we have any other communication stock out there? Okay. So if we sold the 970 and then we bought the 960, okay, the credit there is $335. And don't look at Amazon. Some of you are watching Amazon. I feel like you're not paying attention. Now, if we take a look at this, sold that for $350, we got a credit of $350 or $352 now. $350. Confirm send. Now we see what the max loss is. Now, when you take a look at that, okay, now the one we have not talked about is Google, but I'm going to come to Meta in just a sec, okay? We're selling that 970, buying the 960, credit $350. Now, can we do this in the margin account? That's a denied, okay? This has to be for the IRA account only. I can't do it. It'd be too big of a loss if we take that full max loss. Note the credit there, less the commission, cost of the trade included commissions, okay? Net credit, send the order. Now, the other one I'm going to go back to in the communication space is Meta. Okay, now, here was our upper channel line, calling all technicians. Tell me what you see on this chart now. Yeah, so the reason was the comment from Harlot 3000 is, why not like only do a $5 wide spread? because I'm just trying to have less commissions. Okay. When there's an opportunity to do, let's say, like a $10 wide spread and there's still liquidity there, we're just going to widen it out instead of doing 2 contracts, thus 2 commissions. Now, that's up to you. If you say, no, it doesn't matter to me, I'm going to do the $5 wide. If you only do 1 contract, then there it is. But we would have done 2 anyway. Okay. Now, if we look at, let's say, what we see on Meta, now let's go back to this chart just real quick. Now, I'm not going to pull out anyone in my family, okay? But if I were to calculate the amount of time that some people spend on, let's say, social media, okay? And by the way, X, you could say is social media, sure, but there might be a little bit more of a business purpose. Now, I know on Facebook or Meta, there's some business plays, things like that. Noted. But there's a lot of scrolling where you feel like where are we going with the scrolling, okay? Now, the one thing I want us to kind of watch here is when we look at we know that Meta has made a lot of capital investments. They've taken their savings and they've really invested in trying to get into the AI, okay? Now, when you look at the last couple of years on earnings per share, 10, 13, down to 8.59. It was in 2022 they started making some big investments. Notice that earnings per share dropped a lot. Bounced back pretty aggressively to 14 and then pushed all the way to 23. Now, if you take a look at this also on a quarterly basis, you're going to see that we have never seen for a while, the Q4 here was 802. It's quite a bit higher than where it was previously. Okay? So could some of that investment be returning to them? Now, here's the deal. If we go back to this chart, the reason why I want to pull this up is this had been our line of resistance. Say that. I can't hear you. Say it again. Resistance. Okay, good. Now you guys I feel like you guys are getting it now. Now you're going to see that popped up, came back, and it had a strong candle right at the old resistance, new potential support. Today, sold off to the 20-period moving average, back to the upside. Now, let's say the investor said, James, I'm kind of now wondering, could the 680 really be that line in the sand or the concrete? Could it stay above that? Well, let's go back to the trade. Let's finish up on this. Meta. Now, by the way, let's kind of just take a quick inventory of what we've done. Number 1 is we did NUE. We exited and entered a new position. Number 1. Number 2. We entered a new position on IBM. Number 3, we did also Netflix. We did review Amazon. We don't have any change there. Amazon is up 474. Okay? Don't have any changes there. Earnings is on Thursday. That would be also another company, not completely surprising. We'll have to see what the earnings are. Could those earnings be quite solid as well? Google is up 406 today in the communication space area. Got a couple positions on that. We talked about those yesterday. Probably the one that's most at risk is the shares there. Okay. There's no defined risk outside the stock falling to 0. So if we're uncovered, no downside protection, clearly you think that stock's going to go up. Now, the one other stock that I got to make mention of that I need to is T-Mobile, which is also in that space as well. Okay. Now, last trade, Meta. I just want to summarize what we did. I'm going to go back to this, and we're going to go back to the put spread side, okay? And if I looked at this, we're going to sell a strike, let's say 675. Let's look there. That is below that area of support. Now, let's go back to the comment of like, would you consider a $5 spread or a $10 spread? Well, if we did a $5 wide spread in the IRA, what's the max loss? 343. Well, wonder if we could take, for example, $1,000 worth of risk. Well, and then we would be doing like 3 contracts. And then you would have a commission of 3 times. Well, couldn't we just do the $10 wide spread and maybe not do that as an option? If we did the $10 wide, less the credit, now we actually get the max loss, 693. There it is. Instead of getting 3 commissions, it's just really 1 commission. So that's going to make the difference of whether you do one versus the other. Now check the liquidity. Check the bid-ask spread. Check the open interest. The open interest is tied into the bid-ask spread and vice versa. Liquidity. Now, the biggest actually thing, now by the way, The bid-ask spread is really telling you about today. The open interest is the number of contracts that are open and unexercised. Okay? The bid-ask spread and the volume on the option strike, that's telling you about today. Open interest, that's cumulative, that is still open and unexercised. But they all kind of correlate with each other. We're going to send that order. Now, we talked about doing those trades here today, and then you can see those. So the last trade was Meta. We did NUE, IBM, Netflix. My expectation of you is that you paper trade alongside us. That way, when you come to the class that I do, you can see and follow along. Are they recommendations? No, no, no. But they allow us to have class examples and allow us to learn together. Okay? Now, I also want to kind of say in closing here, if you go to Schwab Coaching, okay? If you go to Schwab Coaching, you're going to see that we have Barbara Armstrong with us here. And you're going to now notice that you're going to see that she will be teaching today at 2 p.m., okay? And that's Eastern time. So stay tuned for that. I'll send that link out as well. Also want to give you a quick reminder that with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk. And also remember that in going forward, feel free to follow us right on YouTube on the Trader Talks channel. Remember, it's on your mobile device as well. Now, remember with what we discussed, it was done for example in illustrative purposes only. And remember that this has been the class on Investor Master Series. Go out and practice what we talked about, follow along in your paper money account, and we'll come back and look at those trades further on. Thank you so much. Take care and have a great day. Bye-bye.